Tesla is one of the most maligned stocks in the stock market. And I'm one of the most trolled portfolio managers on Twitter in the world because of Tesla. But our conviction here is, it is our highest conviction stock. It is the largest position in our portfolios. We think the autonomous taxi opportunity is going to be even bigger. So if we knew today who was going to win in the autonomous taxi network market, given the cash flow models we've done out to 2030, these are software as a service or transportation as a service models, very high margin models, we would be willing to pay $2 trillion today for those companies in the marketplace. Many people think ride-hailing companies are going to be the autonomous taxi network providers. They are not. They haven't been collecting data. They haven't outfitted the cars with sensors to collect the data, to train autonomous vehicles. Tesla has. That's our #1 pick.
Of course, Cathie. So you think, generally speaking, it would be better if people shared their thoughts about your analysis and the research from ARK Invest in the comments rather than describing how hot Tasha looks every single video? Yeah, but you know what, just 1 second. Hey Tasha, do you agree? Does it bother you about all these creepers in the comments always just saying Tasha looks hot as fuck?
Yeah.
It does?
Yes.
Okay, cool. All right, I'll let him know. Yeah, Tasha actually agrees with you, Cathie. All right, cool. I gotta go. See you later. Oh hey, I didn't see you there. In this video, I'm going to be reacting to some clips of ARK Invest Cathie Wood sharing her thoughts around Tesla, disruptive innovation, investing in general, and why the vast majority of stock analysts and retail investors have completely missed the mark on both Tesla and disruptive innovation in general. So let's get into the video. But first, hey guys, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. That is an obnoxiously good return on your investment. I mean, really, deposit $100 and you'll end up with, at minimum, $21 worth of stocks, a 21% ROI on your money. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it.
Battery cost tipping points. This is energy storage is going to transform our economies. We've built our economies on the industrial combustion engine. The developed world has, at least. And that is about to change radically. And you know, this is the first time in more than 100 years that we've had this kind of a change. It is such a change that is very difficult to get investors to understand how quickly this is going to happen.
This is a massive, massive understatement from Cathie Wood here. Most investors, most people in general, have absolutely no conception of what an S-curve adoption rate looks like. Unless you're talking to somebody like Tony Seba, the folks over at ARK Invest, or a few random weirdos on YouTube, the vast majority of people out there in the marketplace, and also general consumers, have absolutely no concept of how quickly EVs will go from almost none of the new vehicle market to almost all of the new vehicle market. In fact, let me once again share my Tesla production and delivery estimates with you guys going out to 2030. Now, doesn't this look absolutely absurd? I've got Tesla delivering around 500,000 vehicles in 2020, then about 1 million in 2021, and by 2030, 22.5 million vehicles per year. My production capacity estimates are a little bit larger, but obviously you've got to factor in downtime, etc. Now, these estimates aren't going to be completely accurate, but the point I'm making is the trend. Maybe this shifts 1 or 2 years in either direction, but this is the likely growth we're going to see on Tesla's production over time. Mark my words. Meanwhile, even the most bullish Wall Street analysts aren't even close to a fraction of these numbers. Let me tell you something. They will be wrong, I will be right, and this video will be here in 10 years to prove it.
So to give you an example of that, and it's all because of battery cost declines. Remember, I say cost is the reason, always, always, always. That's where it starts. The technology and then the cost coming down. So 3 years ago when we started doing, well, really 3 to 4 years ago when we started doing this work, the EIA made an estimate for electric vehicles. They took it out to 2022. And their estimate then was the number of electric vehicle sales in 2022, on here we have 2023, but in 2022, was going to be 250,000 units. In 2018, this chart updated would be nearly 1.5 million. That was just a 2-year difference. They were making a projection for 5 to 6 years out, and they were wrong by orders of magnitude.
Talk about being catastrophically, embarrassingly wrong. I mean, really, orders of magnitude off the actual numbers. This is a farce, and this is the point. If you go back and look at some of the ridiculous, outrageous, crazy, bullish predictions of EV adoption rates in the past, people were literally laughed out of the room when sharing them, and they've turned out to be accurate. And we're going to see this repeat many times over until people finally wake up and realize that this EV transition is happening, and it is following an S-curve adoption rate, and it is going to be much, much faster than people realize. And from a stock investor's point of view, when you have a high conviction that this will happen, yet the consensus opinion is that this will happen, that gap is called opportunity.
We believe this is about to happen again. If we are right, the cost of an electric vehicle is going to drop below that, and this is the average electric vehicle, of a gas-powered car in 2022, and it's going to keep falling. So that in 2025, we'll be at 15,000 compared to 25,000 for the average gas-powered car.
Gosh, guys, I'm struggling to remember here. Can anyone remind me? It must be all the Mary Jane. It's like, I have a funny feeling that a few months ago, maybe Tesla had an event, something to do with battery cells, driving the costs down, and maybe at that event they suggested that in the year 2023, they'll have a $25,000 electric vehicle with full autonomy available. Did that happen, or am I just imagining things here? Just asking the question.
We are going electric. Not only because of cost, but because they're better cars. You can see our estimate for 2023. When the EIA was projecting 250,000 units for 2022, our estimate was 17 million. We looked like raving lunatics. We have not changed that estimate. And you can see what we think is going to happen from 2022 to 23, 17 million to 26. Talk about exponential growth. This is going to be shocking for the transportation world. The analysts out there following the auto industry are value analysts. They cannot handle growth. It's just a different discipline within our business. That's how siloed we've become. But the auto industry, the electric auto industry, is going to be a growth industry, the likes of which we have not seen since the Model T. So it's going to be pretty exciting.
Now, just to check sentiment, I'd love to know, so let me know in the comments below. By the year 2030, what % of new vehicles produced do you believe will be electric?
We think the autonomous taxi opportunity is going to be even bigger. So if we knew today who was going to win in the autonomous taxi network market, given the cash flow models we've done out to 2030, these are software as a service or transportation as a service models, very high margin models, we would be willing to pay $2 trillion today for those companies in the marketplace.
Anyone starting to get the impression that over the last 12 months or so that the market has started to recognize some of that potential valuation in Tesla stock?
You can see on the right-hand set of charts, ride-hailing at the end of 2018 was valued at $240 billion. This includes Uber and Lyft, and they've since gone through a down round. So ride-hailing is not worth that much more. Many people think ride-hailing companies are going to be the autonomous taxi network providers. They are not. They haven't been collecting data. They haven't outfitted the cars with sensors to collect the data to train autonomous vehicles. Tesla has. That's our number one pick. Tesla is one of the most maligned stocks in the stock market. And I'm one of the most trolled portfolio managers on Twitter in the world because of Tesla.
Well, a lot can happen in a year. An innovation thematic play is now the largest active ETF. The ARK Innovation ETF brought in a record 275 million in inflows on Thursday. I mean, let's just take a step back for a minute, guys. In one day, $250 million flowed into this ARK fund. Like, this is insane. Let's continue. on Thursday, bringing its total assets under management to $15.7 billion and shooting past the $15.2 billion in assets under the JP Moron Ultra Short Income ETF, Bloomberg reports. Stephen, don't be so disrespectful to the Wall Street analysts, please. Oh, I'm sorry. You may not be aware of their $90 price target on Tesla stock. Hypothetically speaking, if you were forced to invest with one of these actively managed ETFs, who would you prefer to have your money with? The geniuses who currently have a $90 price target on a $600 stock? Or the fund whose founder has been in the media being laughed at, mocked and ridiculed for a number of years, suggesting that Tesla stock would ultimately go to thousands of dollars per share, pre-split. By the way, Tesla stock split adjusted now is in the $3,000 range. So yeah, leave you to think about that for a moment or two.
But our conviction here is, it is our highest conviction stock.
Oh my God, Cathie, me too. That's amazing. What a coincidence. I even started a YouTube channel and spent every waking hour for the last year trying to explain to everybody why I had such a high level conviction in Tesla stock. We're peas in a pod, Cathie.
It is the largest position in our portfolios.
Oh my God, again. It's also my biggest position. Wow, this is so crazy. What a coincidence, Cathie.
It is a $40 billion company.
Yeah, was a $40 billion company in 2019 when this talk took place.
And we think it's going for that $7 trillion opportunity in 2028. That $7 trillion opportunity is bigger than the entire energy sector globally today, in how it's valued. So that's today. We think because of autonomous vehicles, because of electric vehicles, that energy valuation, that 6.2 trillion, is going to go down dramatically.
What a great place to wrap this video up. I hope you guys have found this insightful. I thought I'd wind the clock back just over a year ago to hear some of the thoughts from Cathie Wood discussing Tesla, electric vehicle adoption, and of course, just to give you guys some context, when this talk took place, Cathie Wood would appear in the mainstream finance media and get laughed at, mocked, and ridiculed. The question I have, now who's laughing? I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. And don't forget, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.